Hi, this is Zachmir with an extra edition of the Bulletin Board Heroes here at Vox Markets for Wednesday, the 6th of April. Some requested stocks that didn't quite make the grade earlier in the day. Starting off with our exploration, where we're still in this broadening triangle. The shares have basically been above the 50-day moving average since the start of the year, which is pretty impressive even on dips and even obviously after Ukraine, etc. Current situation is that at least while we're above the 50-day line, currently at 12 pence, we're still looking for the top of that broadening triangle, hitting as high as 22 pence perhaps as soon as the end of next month. If you're cautious, maybe you'd wait for a break of 14 pence, but the overall trend here seems to be pretty strong, sort of reminiscent of what we've seen of late at I3 Energy, which also has that broadening triangle formation. On to Cizzle, where I saw one or two clever Twitterati buying the shares at the lows, which is pretty impressive. Here we've got an uptrend line there from February, the support line there running through around the 2.2 pence level. Also got an uptrend line in the RSI window and an overall bullish divergence line there from back at the start of the year. So that was basically giving us the hint that the start of February was a potential buy point, and obviously there was some follow through there. The sizzle at the moment, to pardon the pun, is that we've got a break of that resistance line there from February. The level there of the trend line break around 2.4 pence, so we'd like to see an end of day or end of week close above 2.4. If you're fussy, the 50-day moving average at 2.5 pence. We can get through the 50-day line, then hopefully there'll be another retest of the 3 to 3.5 pence area, which is where that December resistance line projection and the top of the channel is currently pointing. Be surprising now, obviously, if we break to new lows, which would be a technical stop loss. On to Caracal Gold, which has been puzzling in the sense that the news flow keeps coming, the company keeps progressing, but since the share price is now the same as it was in September, it seems a bit unfair that we have that current £15 million market cap. The good news today so far is that we seem to have bounced off this falling September support line. That's around the 0.87, 0.888 area, also testing obviously that initial support there that we had. So at the moment we've had effectively a triple bottom, a triple rebound off that support. So hopefully this will be the last time the shares need to test this particular sub 0.9 pence area. If you're looking for a momentum trigger, then that would be a break of a penny and the 50-day moving average in that October resistance line. But I suppose we are trading ahead of a potential production update, and maybe that will change things over the near term. Moving along to another requested stock, Cadence. Here you can see that the shares have managed to bear trap, or like quite a few stocks, bear trapped earlier in March, below the old September support at 16, we'll call it 16 and 3/4 pence. A couple of little testers after that over the course of March, but now we've broken that line of resistance there from January. That's around 17.5 pence, and the longer we stay above that, the greater the chance of at least a move to the bottom of the February gap at 22 pence. Overall, it looks as though basically the shares are in a range and they just overshot the bottom of the range and will re-establish 16 to 32. Which has been in place for much of the last year. You can see actually back in January there was a slight overshoot to the upside, so it looks as though this is a market which just likes taking out the stop losses and then going the other way. Finishing off on a cheerful note, nothing more cheerful at the moment than Osirium, which has really delivered for its fans. I did say before 14 to 15p was my target when we were, I suppose, around 9, something like that, 8, 9p, which seemed to be optimistic, but actually wasn't that optimistic because we'd had an unfilled gap to the upside through the 50-day moving average, and that was the signal for a potentially very big move. We also had a gap higher off the lows back in February, and so it just gave that hint that history would repeat itself with a decent move to the upside. 14 and 15 pence was the initial target, as I said. That was January resistance. Next target was 18 pence, which was a rather more obscure December resistance line and the 200-day moving average, which has been duly achieved. And for today, we can say that even though the shares are through the roof and overbought in the sense that there's an RSI above 80, above 18 pence or perhaps 17 pence to be fussy. We could still hit that line of resistance from back in April last year as high as 28 pence. And the way things are going, that could be seen by the end of this month, or maybe even by the end of this week, the way things are going. But let's see how that pans out at Osirium. But above 17.18, looking as if it can go to 28, and after that, that would be quite exciting if we actually broke to higher ground 1-year highs. That's it from me today. More updates tomorrow.